How can the world of finance serve the economy and ultimately people better than it has been?
Clearly they haven't recently. We've seen a very significant financial crisis, and that in part is due to a failure within financial markets. Those failures are manyfold. One is the failure of the investors, the owners of companies, in attending to and calling to account those companies in terms of their actions, their risk management, the risks they took on. But also, I think, a lack of support, a constructive support and challenge to companies, including banks. So the financial services sector invested in itself, which is quite an interesting dynamic here. And that lack of challenge and support, I think, has led to the crisis that we've seen. We have, though, now an opportunity to do better, and in particular to join up the people on whose money we invest with the companies that they invest in and work within. And that process of accountability down to the end asset owner, I think, is a very important feature of where we are now and where we need to go.
Hermes has been one of the most progressive thinkers in its area. How far are we away from the message being adopted by the mainstream?
It's all about making profits. Fast, though, is an interesting dimension to this. Really taking a step back from this situation and indeed the discussion, it is all about long versus short term. And the pressure on companies to produce short-term profits is a pressure that's produced by the financial services industry itself, to its detriment. And so what the industry now needs to do is think longer term, both from the way in which it treats its clients, and so the types of mandates are offered, the incentivization structures within financial services firms, and also the way it treats the assets it invests in. So you can see then we might be able to develop a concept of responsible asset management, which covers the relationship with the client and the relationship with the company, effectively joining the two up. That, I think, is what we need to do to improve the situation.
Do you think that globalisation could serve the common good of the people better?
Globalisation is a process whereby it's often used, that term, as a means of describing damage to the common good, but to the benefit of companies and their shareholders. That's a mistaken way of looking at globalization. Actually, the companies are owned by the people. Capitalism requires the investment of capital, and whose capital is being invested? Well, it is ours generally. So whether it's pension fund investment, whether it's insurance products or other savings, this is where the capital comes from. So the companies are owned by people, and so to get the globalization process working properly, it's about connecting people with companies. Now, the way you do that in practice would need to be a process of collectivization. So individual shareholders are unlikely to be able to have much impact themselves. So it makes sense that they get together. And that would be true at the institutional level as well. So, and we're seeing this now, that pension funds are starting to work together to pool their ownership of companies, to aggregate the ownership, and to work together in engaging with those companies to bring about change. And so I see a very positive move in that regard.
Have you seen a greater take-up of the Hermes principles post the credit crisis?
We've certainly seen an increase in our client base. So the Hermes Equity Ownership Services, that part of Hermes that I run, which represents pension funds as owners, has increased by 50% in terms of the number of clients it has over the past 9 months. That's following the crisis. As the panic subsided, funds looked around and said, well, it seems there is a job to do as owner, that if we are more active and more responsible in our ownership of companies, that's good for us. And they're looking for vehicles through which to work. And we provide such a vehicle. There will be others also. But we've seen a clear increase in growth in the business that we run, and that's linked to, I think, this notion of responsibility within investment and working together in particular to improve the companies that we invest in.
We're still a long way off from the mainstream adoption of the Hermes principles. Why do you think that might be?
Well, you say that, but I think there is an element of mainstreaming. I'm rather positive in this. We take take an example, carbon risk and climate change. Now, 5 years ago, mainstream investment would have ignored this. It was just not within the time frame. Now, there's no investor in an insurance company that's ignoring carbon risk or climate change, and that would be true of oil as well, and indeed what's happening within the oil sector at the moment is testament to that. As oil price increases, as we reach peak oil, which will happen, I guess, around about 2020, that's the estimate, there'll be the pursuit of sources of oil which are very difficult to get at and very high risk. And that's leading to an analysis of these companies, whether it be insurance or oil companies or others, linked to carbon, which wouldn't have happened some time ago. So there's a mainstreaming, I think, of these types of issues. And that would be true of labour risk also, operations in troubled regions. This is coming into the frame, the view of investors. So we've got some way to go, but I think there is an element of mainstreaming. And an interesting feature of that is, as these issues become mainstream, they cease to be responsible investment issues, if you see what I mean, in the traditional sense. And so it could be we're working with a definition of responsible investment which actually is unhelpful. And what we need to think about is a more holistic way of viewing companies and considering then the longer term aspects rather than simply the short term, which is really what it's all about, I think.
What do you think the world will look like in years to come when people fully embrace the holistic approach that you're proposing to the financial system?
Well, what we're going to have is longer-term investment mandates. We're going to have better alignment of interest between the clients of the investment sector and the investment companies themselves. I think more transparency also, and we're starting to see this already. The hedge fund industry has transformed really since the crisis, and those hedge fund managers that survive and prosper will be more open, more transparent, and better aligned. That's true in private equity and various other places. So we'll see an increased alignment of interest, more transparency and openness amongst the financial sector, and better and longer term mandates. And that will translate, and there'll be other mechanisms for this also, to more attention to the ownership of the asset. So simply trading the securities will not be acceptable anymore, particularly on a short term basis, without attending to your position as owner. And that attention to the position as owner, to be clear, is beneficial to the owner, because the property that is owned, if it's maintained, you take care of it, is going to be worth more than it would be otherwise. So that's what I see happening right now. The challenge to that is, if we have another strong bull run in equity markets and other markets, will people lose interest in this? I think not. I think this is a change which is not simply due to the crisis. It had been happening previous to this. Think about the United Nations Principles for Responsible Investment, which was launched in 2006, 2 years before the crisis, and this will continue. UNPRI, by the way, has now $20 trillion worth of assets signed up to it, and some 800 of the world's largest investors, funds and fund managers. That's a clear indication of intent to be longer term, better owners, and to take account of these issues in investment decision making.